Only with self-custody you can have a direct ownership of Bitcoin. Without direct ownership, why are you even holding the asset? If governments become oppressive, freedoms can be toppled unless they have some sort of backup. That would be, for example, Bitcoin. Most people are driven to crypto because they see it as a path to escape poverty. People still don't really understand that you can use Bitcoin to protect yourself. They still treat Bitcoin as a risky asset. And let's say you are in Iran and you expect that the war is gonna happen. So if you stack some Bitcoin, you can avoid inflation and you will still have more money if you keep it in Bitcoin than if you keep it in the Iranian currency.
Self-custody has become one of the most important pillars of crypto. Yet, most of the world still keeps their digital assets on centralized platforms. Today, I'm joined by Tomáš Vaic, Business Development Manager at Trezor, one of the most trusted and longest-standing hardware wallet brands in the world. Trezor practically invented the hardware wallet category, and today they are powering a global movement toward the secure, sovereign ownership of digital assets. This episode is all about the future of self-custody, how Trezor is expanding internationally, and what it takes to build hardware products that protect millions of users across dozens of jurisdictions. Thomas, thank you for coming today and joining me today.
Thank you for inviting me, Nasib.
So let's begin with your background. Please give us a short version of your journey. How did you end up at Trezor, and what drew you to business development in a sector where trust, security, and user education matter as much as revenue?
Well, I didn't even kind of think that I will end up at Trezor in the first place because my initial goal in life was to become a hedge fund manager. At least that was my dream at the time when I basically decided to change this path and join Trezor as a customer support specialist, which at that point wasn't something I really wanted to do in my life, but the product that Trezor had and the people that I have met during their interview and then therefore during my first days at Trezor kind of convinced me that what Trezor does makes sense and that there is a chance to go forward with this company and get a position that's closer to what I was studying at that time. And so eventually after half a year, I started, I transferred to B2B management where I stayed for about 3-4 years. And then eventually our CBO asked me if I would like to lead the international expansions, at which point I had not really any experience with doing international expansions, but I got the trust and I did my best to basically build this department from the ground up without that experience by learning on the go.
I think that our interview is a part of that aftermath of your attempts to expand, right, Trezor internationally a bit at the conference. So you're doing pretty well. What's the most unexpected part of working at one of the world's biggest self-custody brands?
Well, when I started, it was a small company. I don't think it was even 50 people when I started. Now it's 200 plus of us in that company. So you would expect that with such a size, a lot of the processes will become rigid, and a lot of the people will lose chance to kind of put out initiatives and drive them to the completion without anybody just telling them that those are the initiatives they should be driving. But we have kind of retained this startup culture, and that's what's surprising to me. The fact that when I got this position, I had no formal experience. I just had a trust from one C-level manager, and I could develop this department from the ground up, with of course help of a lot of managers and people, and basically a lot of support from people within the company. But in any other traditional larger company, you would probably have many different steps that you would have to take before you could even get to that position. Here, we just wanted that position. They found someone that they believed could get us there, even though I had no experience, and now we are where we are now. I mean, we can talk about it a little bit later, but the chance to take initiative and drive it to the end is really what sets us apart from other larger companies, I believe.
All right, and you know, Trezor has been around since the very beginning of hardware wallets, right? So, what's the core philosophy that has kept the brand trusted for so long?
Hmm, I mean, first of all, we are a battle-tested product. We have been here, as you said, since the beginning of hardware wallets. We invented hardware wallets, and we have been here without any major incidents since then. What also kind of makes us very trusted is that we are radically transparent, and that comes from the open source development, not just the software, but by now also hardware. But not only that, we also are very clear in our communication. So if something is, let's say, um, in the scenario that, for example, our customers' emails get leaked, we won't be the ones that will be trying to hush it to try to tame the consequences of this happening. We'll go forward. We will tell it to the community, because they need to know that something like this happened, and that some of the security can be compromised. So we won't hush it. We will go forward. We will bear the consequences, but we will at least sleep calmly, knowing that we are protecting the users. And as well as we are still sticking to our mission, and our mission is to empower individuals to hold their crypto on their own and be able to empower themselves financially by doing so. And that has not changed since the inception of this company, and of this product. This product was developed for Bitcoin, and we still continue developing it for Bitcoin, even though we support, of course, other cryptocurrencies and other products that are not directly tied to this mission.
hmm And a lot of also a lot of people think a hardware wallet is a hardware wallet, right? So, but you and I know that that's not really true. What actually differentiates Trezor's approach to security?
Mm, I think that we are very mindful of the three security pillars that we take into consideration, which we never kind of sacrifice. So, security, privacy, and usability is, let's say, something that are a base on which we base all of the further development of the product. And I don't think that kind of differentiates us. Other companies also have to take these three pillars into account, but we really make sure that none of them get compromised in the process of developing further.
Let's talk about the stack. So, open source firmware, transparent audits, secure elements, usability layers. Which component do you think users underestimate the most?
Mm, I would definitely say usability layer, because all of the other, they're kind of a standard by now for all of the hardware wallet products on the market. Usability layer, that's something that you don't think about too much when you're making the decision to purchase hardware wallet. But if you're not too experienced, it's actually one of the most important, or one of the most, in my opinion, one of the most important aspects when choosing a hardware wallet. Because if you're not that experienced, and the product is not user friendly enough, you have a bigger chance that you make a mistake. And as you very well know, the hardware wallets are natively secure. Most of the risks that come with hardware wallets is actually users doing something that they are not supposed to be doing because they, for example, don't understand the underlying technology well enough.
Mhm. For someone who uses an exchange or an application as their primary wallet, what's the clearest argument for switching to hardware?
Mm, well, I would say there's like three of them, but I'll take it one by one. It's important to know that crypto and TradFi are not the same. If something goes wrong in TradFi, there are centralized entities that can, in some one way or another, reverse these mistakes to some extent and under some conditions. In crypto, if exchange gets, for example, hacked and the hackers manage to withdraw the Bitcoin from the exchange to their own wallet, unless you actually stop the hackers physically with that stack of Bitcoin somehow on them, or if they try to launder it somehow and you manage to kind of find it out and hold off of those assets, you kind of have no way how to recover those funds. You can practically consider them as an exchange lost. So unlike with traditional finance, you cannot really trust these centralized entities that they won't get hacked. And if they get hacked, you're actually losing money, and there's not much really you can do about it. Unless, of course, there are some things that exchanges can do, but I'm not going to go into too much detail. Another thing that's very important is that only with self-custody you can have a direct ownership of your Bitcoin. And to be quite frank, without direct ownership of Bitcoin, why are you even holding the asset? Because without a direct ownership, you cannot get the benefits that Bitcoin is bringing to the table as an asset class. And last but not least at all, without self-custody, you cannot use all of the on-chain services that are available. So you're kind of robbing yourself of the options that the blockchain technologies provide to you without having some sort of self-custody. And the only safe kind of self-custody is a hardware wallet. So yeah.
I see, I see. Unless the goals are different, right? Unless they're asset managers who want to actively trade and they into liquidity and so on. But you were talking about the fundamentals, right? The very fundamentals that Bitcoin brought to the financial world in the first place, and I agree with that. Um, all right. And from your perspective, which regions are growing the fastest in hardware wallet adoption right now?
I'm just gonna get a little bit back to what you have said. Nowadays, even if you want to actively trade, you have Hyperliquid, you have
Mm.
AssetX, and they kind of provide the same experience, it's the same leverage trading that you can get on traditional exchanges, just on chain. And so you can even by now go do everything that you could do on exchange with the same quality of service or close to the same quality of service on chain with a hardware wallet. But to clearly answer your next question, the biggest growers are APAC and South America, and I do have the numbers of which one of them outperforms the other. But generally speaking, these two are very close to each other, and it really depends on the year. The latest would be actually APAC, but South America really is very close.
Mhm. Interesting. And do you see different motivations in different markets, right? So you mentioned LATAM, right? South America, and it's being usually associated with inflation resistance, right? Europe with regulatory clarity. That's a classic. That's very classic, right? So, and Africa with financial inclusion. Asia with trading hotspot as a trading hotspot. So, how does Trezor strategy adapt to these different drivers?
Mm, well, I'll clarify a little bit first on the region and the motivation, because I actually don't think that Europe's main the people from Europe, their main motivation is regulatory clarity. Actually, in Europe, the people that invest into cryptocurrencies usually have some excess savings, and they see Bitcoin or cryptocurrencies as a way how they can protect those savings from inflation. And they really do understand, compared to other regions, that, and it's kind of a paradox, but that if the governments become oppressive and authoritarian, their freedoms can be toppled unless they have some sort of backup. In the sense that would be, for example, Bitcoin. In Latin America, as you have said, it's very much inflation resistance, plus also kind of avoiding some of the regulatory difficulties. In Africa, it's kind of financial inclusion plus inflation resistance, because in Africa, a lot of people don't even, like, a lot of banks don't even offer mobile banking. And so if you tell someone in Africa that without any other intermediary, you have this asset that you can store on your phone and transact and pay with it with minimal fees, and it can actually extra protect you from inflation, it's a game changer for them. And so that's kind of why we started Trezor Academy, that supports locals in Africa or other developed countries in educating them about Bitcoin, and with it options on how they can custody that Bitcoin. And as you said, Asia, it's mainly a trading hotspot. I think the inflation and kind of like uh, government protection narrative hasn't really matured there yet, but I did still think it might happen further down the road, depending on how war evolves. But in terms of what is the difference in the strategy when you approach these different markets, of course there is some difference, but we usually have very clear framework of how we approach the process of expanding into new countries, and that kind of dictates how we approach the individual countries. Because what we do is we analyze the world to see which countries have the biggest untapped potential for us. We select those countries that we want to focus on, and then we analyze the countries deeply using secondary and primary research to actually find out what is the core problem that we have. Is it that the hardware wallets are not even as adopted as in other countries, or is it because our competitive position, for example, is not sufficient compared to other companies that operate in this market and sell hardware wallets? So it really depends on what the issue is, and based on the issue, you then work with the people in the team to kind of devise a strategy and a plan how to solve these issues. And that inevitably then drives the growth of revenue in those countries, as long as you actually solve that issue.
And what's the biggest misconception people in developed countries have about custody in emerging markets?
Mm, I would say that, first of all, I think that people really don't understand, that, generally speaking, that their crypto is not stored on the Trezor device, as you have previously correctly noted. And it then leads them to underestimate the importance of the wallet backup. that that you cannot share with anyone, that you have to keep secure. And if you underestimate it, you are bound for something bad happening to you. Another, going directly to your question, I think that in developed countries, we have this notion that people in emerging countries are driven to crypto to escape the government oppression and inflation, which to some extent is also true. But most people in those countries are, to be fully honest, driven to crypto because they see it as a path to escape poverty. Because generally speaking, the more difficult your financial position is, the more willing you are to take some sort of a risk, some sort of a gamble to improve that position. And when they see that on some coins you could have done 10 times, 100 times returns if you invested at the right time, no matter the fact that a lot of them then rocked and went in the dust and you don't even remember them this cycle, they will see it as a sort of a way how they can escape that poverty, and they will take that gamble. So yeah, I think the gambling culture and adoption of cryptocurrencies in those countries goes hand in hand, even though it's I guess it's what it is.
I think it's quite universal, right? It doesn't matter if it's a developing country or developed country. I fully agree with you. Uh, a lot of people see it as a way out, as they put it in all of the metrics, right? So and yeah, and they try to escape it this way. However, I think the biggest focus should be their own, daily choices, financial literacy, and so on and so forth. But also the external factors that are affecting them, and they can't do much about it. But but let's come back to Trezor, right? Let's focus on the business development at Trezor. How do you choose which ecosystems or protocols to partner with?
Well, we usually support projects that are or coins that are battle tested. They are widely used and they have a active community. So, as a rule of thumb, we won't usually support some coin that just came out. We want to see that the project doesn't, for example, rock in the first several months. We want to see that the community is active, that people are using it in real life, and so that by implementing it, we will actually influence a lot of people to be able to securely hold the cryptocurrency that is in question.
And there is a wave of account abstraction, passkeys, and smart wallets coming. How does a hardware wallet company stay relevant in a world where custody may become more invisible?
Well, first of all, we follow industry trends and we innovate to simplify self custody for the masses. That is the core. But as you say, I do believe that that our industry will go in the direction of abstracting from the complexity. But that can only happen if we stick to the creating products that don't sacrifice the principle of safety and full of ownership, because we will never make our product in any way simpler at the expense of the security or full ownership. But I still see that our industry moving forward will put more weight on some sort of good way of abstracting from seed. Of course, you still have to have some equivalent to have ownership, but some sort of abstraction can help a lot with preventing people of inputting that seed somewhere if they don't understand that if you input that seed somewhere, that will 99% of the time lead to loss of all of your funds. I think multi-share or multi-sig setups will become increasingly more popular, or at least I hope, because it's another way how you can prevent some of the mistakes of, for example, losing one of your seats. If you have a multi-share, you still can use the other two if you have two out of three set up to recover your wallet. So loss of one of the seats is not detrimental as with a single share setup. That's just an example, as well as some sort of spending limits set up by the user or other measures that can prevent theft of funds. But again, spending limits or any sort of measures of this kind can be only or should be only implemented, in my opinion, as long as it doesn't take away the ownership away from people. That it only kind of allows them to protect themselves against themselves for a certain amount of time. But if they really want to do that decision, that transaction, or if they really decide to do something, even if some third party or anybody just thinks that it's not the right thing to do, they should still be able to do it, because that's the whole point of Bitcoin in the end.
Mhm. And Trezor has been expanding aggressively, right, throughout the last years. New markets, new product lines, new educational initiatives you have mentioned as well. And if you had to pick one strategic priority above all others for for the next 12 months, what would it be?
Mm, well, definitely making self custody simpler and more foolproof, as you have implied, and I kind of can confirm this is the number one priority that we should all have. As well as making self custody this all in one stop for crypto, so that it's not just the most secure way how to hold crypto, but it's also the most convenient way how to hold your crypto. That can help with enlarging the pool of people then that adopt self-custody, and inevitably that helps everyone in the hardware wallet market, not just us.
Where do you see the next 10 million hardware wallet users coming from?
Mm, that's difficult, and that's that I mean, yeah, that's a goal that I think all of us have, and if we knew the exact answer to that, we'll probably be already there. But actually, I think it comes from several factors. It comes from people's understanding the basic value proposition of Bitcoin, because without the hardware wallet, accessing the full potential that Bitcoin can brings is impossible. And for people to really understand the full potential of Bitcoin, I think some major issue has to happen, meaning some serious financial crisis that shows that you cannot trust even the entities that are usually considered trusted, like banks, some degradation of trust in governments and central institutions. So at the same time, what stop like what guarantees you have that you won't get into the position where government wants to somehow take away your wealth, given the disparity between people that have and people that don't really when the inflation picks up. So I think something, simply said, something serious has to happen for people to start seeking alternative assets such as Bitcoin, and that will inevitably lead them to hardware wallets.
Anyways, so coming back to Trezor, Trezor is one of the few companies that has survived every cycle. Why do you think hardware wallets remain counter-cyclical, growing even in bear markets, right?
Mm,
And you kind of you elaborated on this already, right? But maybe there is something more you would want to share.
Um, actually, hardware wallets are not counter-cyclical. I think the general crypto market, no matter the price, no matter if you're in bull market or bear market, the industry as a whole is growing. We continue innovating. There are more people generally in the market. The participation, the amount of people that are simply active in the space, it depends on the market conditions. That's obvious, and it actually is. The pinnacle of our industry. In bear market, everything crashes to almost zero. Be it our sales, well, not zero. I'm exaggerating by a lot, but when you go into the bear market, this our sales, the prices of crypto, everything in the market goes down by a lot to some average mean, and then in the bull markets it spikes up into the levels that you have not expected, that you could never really expect. And so in that regard, we follow this cycle as well, but that mean that we are returning with each bar market consistently grows. So we as a brand, we and our product, we are very much cyclical to how the crypto is evolving. The only thing that remains counter cyclical is actually the trading, because I mean, it's
Mhm.
not necessarily counter cyclical, but every big upward or downward move will generate good revenue for exchange services, because volatility is what matters, since the profits come from fees, not and participation is large in that regard when the price moves by a lot.
Do you think self custody will ever reach mainstream levels, or will it stay a power user behavior?
Well, I think I'm a little bit I'm not objective, but I do see there is a potential for this further down the road, and I would probably not be with Trezor if I didn't see that there is a potential for this further down the road. But we still have some developments or innovation coming our way to make it actually happen, in my opinion.
Mhm. What does mainstream self custody look like? So, for example, hardware, embedded chips, mobile secured modules, and so on and so forth.
Mm, I think it looks like a hardware wallet that we have now, but as mentioned previously, it has some sort of abstraction from seed. I'm not gonna go into details of how I think that will go practically, but simply some sort of abstraction from seed, some sort of shared custody, which prevents collision of parties involved in that shared custody, and hardware with added features like time locks, clear signing, transaction simulation. Well, simply features that to some extent prevent accidents from happening or forgive the user when those accidents happen.
Let's stop for a minute. Here's a brief moment of context for those who may not know me. My name is Nasib Fathi. I'm a scientific researcher in the blockchain space, and I work with executives and organizations as a growth and media professional. My focus is crypto at the intersection of institutional finance, market structure, and regulation. You are watching the NFK podcast, where these topics are discussed through conversations with people shaping the development of digital assets space. Let's speak about security culture and user psychology, right? So most people say they want sovereignty, but they don't want responsibility. How do you design products for users who want the benefits of decentralization without the cognitive load?
Well, we spend a lot of time on gathering feedback from those users, because and communities, we have to first understand them to design a product that suits their needs. And I mean, there are many different needs that you can have there, many different let's say ease of use aspects that you might cover with the research. But at the beginning of it, there is always understanding who you are designing the product for.
And should everyone self custody, or is it unrealistic to assume billions of people will manage their own private keys?
Well, I'm not really objective in this, but I do believe that everybody should self custody because if you if you really think about it, there's no other way how you can really leverage the full potential of Bitcoin without self custody. And we're kind of here as a company to make it as simple for anybody that wants to hold Bitcoin, um, to hold that Bitcoin in self custody and have a full ownership of it.
I also see this as something strictly based on the context, right? Because you guys are operating within a different context than people who are, for example, ETP services providers, right? Products providers, for example, who develop exchange traded products. I think they target different people who are looking for different things, right? So in your case, sovereignty plays a big role. In their case, for instance, people are maybe looking more for some regulated exposure, right? Exactly on that, like looking exactly for that. And in your case, it's more about being sovereign and being autonomous, right?
Kind of, yes. In terms of users, we can still attract people that want to trade. You can still trade and own hardware wallet. It's not mutually exclusive, but I think what matters here is the mission that we have as a company, because as an exchange you will be mostly driven by profit. And I'm not saying this is bad. You know, we all have to make money to be able to create the products, and I continue creating the products. But with us, we kind of go in the direction of serving that mission, and we serve that mission well. We create profit, and we don't serve that the mission only to create profit, but we also serve that, like, one of the core of that mission is actually make people be able to be independent with their money. So I guess it goes two ways. Some people will want to will want to trade to try to basically get some gains from the investing, but on top they also might want to be sovereign with the assets that they hold, and when they hold them and don't need to trade them, or even when they want to trade them, they can still hold them at self custody. So I don't think it's mutually exclusive. Or just that's why I think everyone should kind of self custody. You can do it even if you want to be a trader.
It's also worth noting that exchanges themselves are also shipwrecked keys, right? So, for
Exactly.
yeah, yeah, yeah. So we've seen exchange collapses, hacks, and regulatory pressure. What industry event in the last 5 years had the biggest impact on hardware wallet demand?
I mean, FTX crash was kind of big, but most of these are usually very short lived. To give you an example, when the FTX collapse happened, it of course boosted the demand for hardware wallets, because people immediately realize the risk that they are facing when they have crypto on decentralized platforms. It doesn't have to be just FTX, it can be any other exchange. And people tend to realize that only when things go south. But what really drives the adoption of self custody in the long term is the combined effect of all of these collapses, hacks, and other incidents in the past, which, if you search on Google for hacks or any of these incidents for the recent ones, you will usually find some that happened very recently, and it just depends where it happened, how big it was. But these things are happening, and they will continue happening in in the future because of the nature of how crypto works.
You, for example, to give a really, to draw the parallels with what's happening at the moment in early 2020, like Q1 2026. Without getting into details of what's going on, does it affect the revenues on your side positively, or what is the dynamic? Because there is a market stress for sure, not only in crypto, but well, way beyond it as well, right? But you earlier mentioned that when like this market turmoil happens, it affects revenues on your side, like positively, because people prefer self-custody, sovereignty, as you mentioned, and being autonomous and independent.
Well, I would think that this is how it happens. We try to serve this mission, but the truth is, at this moment, Bitcoin is not really a hedge for the market. With like market going south, if there is a stress in the market, Bitcoin generally still acts as a high beta asset that will positively correlate with S&P 500, generally like a general stock market index. So right now, even though I think that the recent developments show that there is a wider geopolitical risks that you could actually protect yourself from by adopting Bitcoin and having it in self custody, people still don't really understand that you can use Bitcoin to protect yourself. They still treat Bitcoin as a risky asset. So, as you have seen, the price of Bitcoin is dropping despite these developments.
Because I read the headlines mentioning that these tensions that there are, like, geopolitical tensions, they're also affecting people in a way, like in those regions, in a way that they start, like the activity, crypto activity there rises actually. Like they start preferring Bitcoin, for example, over their national currencies, and rightfully so. Why? Because their national currencies, their purchasing power just gets crushed, um, for obvious reasons. So it's interesting, right? So from one side there is this, these tensions, they affect negative the Bitcoin price negatively. So businesses around Bitcoin and digital assets, they get affected one way or another as well. But in the meantime, people themselves, so the end users, regardless of those turmoils and those tensions, they still tend to lean towards this asset class, right? And so because of its core promise, the so basically the independence, right, and freedom,
Yeah,
financial freedom.
it depends what you like. If you think about it, the effect of people, let's say, using Bitcoin to protect themselves from inflation, or to run in Iran, or to run out of areas that are hit, this is a small chunk of people that are in the crypto, and so the effect of negative development in the price of S&P 500 is larger than the effect of those people that need the assets to protect themselves. But at the same time, still, this asset, no matter how much it is volatile right now, if you are in a specific situation, let's say you are in Iran and you expect that the war is gonna happen. So if you stack some Bitcoin and you hold it in self custody, you can avoid the subsequent inflation, and you will, despite the volatility, still have more money if you keep it in Bitcoin than if you keep it in the Iranian currency. The
So in
simple
this context, it's a hedge, a clear
Yeah,
hedge.
it's a hedge. It's a geopolitical hedge, and it's a safety tool for you. For example, if I don't take me for the word, I don't know how difficult it is to get out of Iran right now. But if you wanted to get out of Iran, try to take gold or some other asset that is even, I don't know. Let's say you hold some stocks that are Iran based. You won't take them out really, or it will take a long time before you'll be able to take them out of the country. But
If you own real estate as well, sorry for cutting you off, owning real estate, right? Because there are a lot of people have been mentioning real estate as something more profound, as a more profound investment, as opposed to Bitcoin and digital assets, and a lot of fun. So if you own land, real estate, local businesses, boring businesses, as people like to put it on LinkedIn, right? And advertise their 7, 8, 10 boring businesses and making them millions quietly and so on. Yeah, if you had this, then that's it. It's poof, it's gone. And nobody protects you from this, right? And consequent possible seizure and stuff like different actions and your funds or your assets getting stolen. Anything can happen, right? So
Yeah.
I'm just generalizing in general, not mentioning any concrete examples or occurrences. So yeah, in this case, it's interesting how it really depends on the context and the party. So
Also, I guess I'm going way too deep in this on this one, but I'm kind of not a fan of investing in personally in housing in properties because you have to service them. You constantly have to pay something to own an asset. You have to take care of it. You have to rent it if you want to make some money on it and not just pay to hold it. And so it's an asset that you have to put a lot of effort into, and whose yes, the volatility is not that big, but it depends on what stage of the cycle you are at, and it doesn't even have that good of a return as for example stock index, which performs well when the housing is performing well. So I don't know, you're maybe talking to the wrong person, but I think the only benefit of investing into properties is that you need to live somewhere. So one property, good to have, of course, as well as you can leverage it very well because banks are willing to also provide you more money, and so you can buy more of them with external capital. But that's it. I think there are better asset classes than that.
yeah, I agree with this. But again, it depends on the perspective, right? I wouldn't be against having a nice flat in New York, right? So in Tokyo, for example, and in Vienna and Berlin, London, and so on. Why? It's a great diversification as well, and I'm pretty sure that there will be always there will be some clients ready to, to rent them, and so on. It makes sense, but yeah, yeah, it requires maintenance. It requires your constant attention, or at least you need to delegate that and manage these processes as well. It's not very liquid as well, by the way. It's worth noting that too. So when something happens, out, beyond the context of war, yeah, it's still like you can't sell it that fast for a good and fair price, right? So yeah, so it's also worth noting. Um, However, some people would argue because even in Moscow, like if you sell like a big house for like not a cheap one and so on, interestingly, there will be people willing to buy it. Like it won't take you too long, right? So again, it depends on the case, but generally, if we compare to digital assets, it's much more liquid for sure. Um, yeah.
100%.
What does the hardware wallet of 2030 look like?
I think it looks like our newest model, Trezor
Mhm,
Safe 7,
mhm.
and so it's wireless. It has a touch screen. It's prepared for future developments in technology. So, for example, in our case, we made the product quantum ready, meaning we can update the firmware in a quantum, basically resistant way. Uh, but also, I think it would be beneficial to add features such as some sort of abstraction from the seat itself, some sort of shared custody which prevents collision, and other features like time logs, clear signing, transaction simulation, which directly prevent accidents from happening, or they at least forgive users when these accidents happen, because it's still a new technology to a lot of people.
So to follow that question up, do you think hardware wallets will evolve into multi-device authentication authentication hubs, passkey generators, identity wallets, or something still completely new?
Mm, I don't think they will go in the direction of multi-device authentication hubs or passkey generators because we went that way in the past. Trezor Model T has a support for 3.2. T1 still supports U2F. And so
But
that
people
already
prefer simpler implementations,
yeah,
more
but it
straightforward.
wasn't really that difficult of a implementation. And the biggest problem was in the fact that we still would have to somehow communicate to people that they can use this feature and how to
Mhm.
use it. And they bought a hardware wallet. They don't really like it mixes the positioning for the people to whom you position the product to. Some people want the U2F or FIDO2 features mainly, or they want to secure their crypto. And on top of that, you want to be able to carry these keys with you at some point, but you don't want to be really carrying a hardware wallet with large sums of money, for which hardware wallets are kind of best suited for around, just because you might also want to log in into some service. So I think these two things will remain separated. But and in that regard, I believe that self custody, it will be kind of similar to what it already is. It will just become, we just need to, and will be adding as an industry, features that create and that make self custody kind of like neobank on blockchain, because you want to be able to stake the coins to earn income on those assets that you are holding. You want to be able to yield your stable coins. You want to trade it. You want to buy it, sell it, swap it. Simply all of the things that you would kind of expect to do in on a platform like, for example, Revolut. I believe there is a future where we will be able to do a lot of these directly on the blockchain, and directly with one of the hardware wallets. It doesn't really matter which one. I'm more talking about the direction, let's say.
You mentioned neobanks and that directive. Um, are you guys working towards that?
In some way, yes, we are working in that direction, but there's a lot of features that you would have to add to make it like fully neobank, and we are still focusing a lot on people that want to hold their coins, and so we kind of go in the direction with features that help them kind of that help the passive holders more than the active ones, but we are going in the direction of active, targeting active holders as well.
Never lose the sight of your core product, right? That's a good motto. But at the same time, it's important to consider that yeah, there are neobanks in development, right? And these guys are progressing. So it's also important sometimes to move towards that the directive if it's appealing. In an organized and strategic way. But I guess that you guys are doing actually the right thing, right? So never lose the sight of your core product. What
In
age?
uh,
You
neobanks, like, let's say, or let's say traditional finance companies like Revolut or Robinhood, they are moving in the direction of crypto, and
Mhm.
it makes sense for them. The same way it makes sense for us to move in their direction using the services that are available on chain. So I
while
think this is
while you guys are moving towards each other, do you think it would make sense to expect some interesting collaborations?
well, we would definitely be open to integrations with, for example, Revel. That would, if they made some sort of a self-custodial wallet within their product, we would be happy to be integrated as that product that you can connect and manage your self custody assets with Revolut. So I
I haven't
guess
used
we can
Revolut for a
actually.
while. I haven't used Revolut for a while, but last time I used it, I think it was like 2021, if I'm not mistaken. And I remember being a bit upset about not being able to take to send my crypto to the exchange, for example, right? Or to do whatever. Like I did it. That wasn't really my goal, but like to do whatever with it. So that was, I understood the logic behind that move, right? So it's fine. But I was a bit upset about it. But what you're saying implies that they would allow then to like this to happen, right?
Well, I don't know if they're gonna allow that, but I'll. That's my hope that they will go in the direction moving forward, because that would mean that they're still moving in the direction of what this industry was kind of meant to be. If you just make it custodial, like centrally custodial by third parties for most users, then Bitcoin is kind of losing its value proposition for the people that decide to use this sort of third parties. So I think there has to be, it it might be sometimes more effective to use exchanges. But at the same time, to keep the core ethos of Bitcoin, you also have to allow people to withdraw and hold the take the custody of their funds themselves. But maybe I'm naive, and this is never going to happen.
Yeah, fees, right? Then what's in there for them? That's the that's a good question. So AA agents, right? So we need to elaborate a bit on that one. So AA agents are about to start holding value and interacting with chains. They already started it, right? To a certain extent, right? So it will happen more often, more frequently. So does Trezor think about custody for machines, not just humans?
Not at the moment. We design specifically for the end users. We don't even make B2B products. I think right now we could get much more money in that segment than AI agents, and we are still not there. We really focus on B2C clientele because of the mission that I have already explained.
If you and that holds that's not holds true, but that makes sense as long as AI agents don't become your B2C clients, right?
That is true.
Yeah, yeah. If you could redesign one part of the self custody UX from scratch, right? Today. So what would you change?
I would actually not redesign anything because I'm not a UX designer. I'm not a UX designer, and I think I would be terrible at this job.
But you definitely have hold an opinion, right? As a user of your product and as a person who constantly faces feedback.
Well, I would, or at least what I see as a feedback from the market. Tangem is getting very popular. Thanks, Tangem, the card
Mm,
open
mm.
wallets. So somehow, and it's connected to seed abstraction. People are very much drawn to the fact that they don't have to write any words as a part of the setup and keep the words. They want to just tap a card, get the shares or seed words on the car, and keep the car without the need to have the words. Now, if that's the best approach, to some extent, you might sacrifice some aspects in terms of security if it's not done properly. If you take away from people the option to, for example, write that seat down, and having cards alone, again, that's not the way forward, because if you only have a card, you can only get the seat via the screen on your phone. You can also only confirm the transaction or confirm, let's say, the address where you're sending the funds on your phone. So it's not you're sacrificing security for the convenience. And so I think I would like us to have a device paired with the card, because I think they could make it much easier for people to get onboarded, and also it could make it much faster to make a multi-share backup.
I agree. So the closing question. Where is the best place for listeners to follow your work or learn more about what Trezor is building?
I don't really post on LinkedIn or any social media, so I guess you can learn about my work, seeing the adoption of hardware wallets or Trezors in Trezor
Fair.
in the markets where we are currently expanding. But you can definitely follow Trezor on Twitter. That's where we post mainly, or that's where all of the major news are posted, as well as we post job updates on LinkedIn. That if you are interested, even yourself, you can stay updated there.
I will include all the links right in the description. All right, Thomas, thank you for giving a deeper look into the future of self custody and the role Trezor is playing on the global stage. This was very, very insightful. And to everyone listening or watching, like, subscribe, or follow both of us and share this episode with someone curious.